What is up, everybody? Welcome back to another episode of Bitcoin and Markets. Hope you're doing well on this Friday. Price is pumping, nearing that $100,000 mark. I went live earlier with the community on Telegram, thinking it was just about to break the 100K, but I live streamed for about 45 minutes to an hour. Ended up not breaking the 100K, but we are going to watch that here today. Respond to a few videos that have come out on X over the last 24 hours. One with Michael Saylor, one with a new CEO of like New Market Capital, something like that, talking about corporate real estate incorporating Bitcoin collateral. So we are going to discuss that and then just watch the chart and see if Bitcoin can break 100K. First thing, as always, bitcoinandmarkets.com. That is the website. You can keep up with all of the content that I put out. Oh, I forgot to put an image for this one. But anyway, that's where you can also support the show. Become a paid member, $5 a month. It's less than a coffee these days with inflation. And excuse me. And you can also get premium content over there for $15 a month. You get my premium stuff. I talk about Bitcoin, long-term forecasting, near-term forecasting, cycle forecasting, all that kind of stuff, as well as macro. So that's where you can find all that stuff on bitcoinandmarkets.com. Okay, so here is the Bitcoin chart. We are pushing up a little bit here again, 99,500 roughly. Let's see where Coinbase is, 99,535. So we'll see. I have this alarm set at 99,800 for us as we're live streaming. If that goes off, be wary. That might be a little loud, but that will go off, and then we'll watch it cross 100K if it does so on this live stream. This kind of curve, exponential curve, is just what I was toying around with earlier today. I drew this in here to get some people excited on the Telegram, but this is a real nice kind of parabolic move here in Bitcoin. The top of this is 107. I don't think we're going to like break 100 and just dump right from there. We're going to go through 100K and probably significantly on the other side of it, whether that's 5,000, whether that's 10,000, who knows. But this is moving upwards. Okay, and let's go back to the 15-minute, and I keep that alarm on there. Let's look at a few other markets. The ETH BTC, actually, let's go to the daily here. Down on the day. This was the big hammer punch down, gorilla fist, and punched ETH back down. There is no interest in Ethereum. It is a dead coin. It only trades like it does because it's somewhat attached to Bitcoin with this affinity scam. So I've called it altcoins an affinity scam. They're not decentralized. They're nothing like Bitcoin. They're just try to say they're like Bitcoin, and so that imparts some value to these things. But people are seeing through Ethereum. They're seeing through the altcoins as well, and they are not trading worth anything. Gold is up on the day pretty significantly. Let's see. This was a 1.7% move, which is very, very good for gold. I expect gold to do well, just not nearly as well as Bitcoin for the same reasons. Dollar. I put out a tweet, actually. Let me go to that tweet and pull that up. I am live on YouTube, Rumble, Twitter, and Telegram. So you guys can jump over to the the YouTube Rumble if you want to like, comment, subscribe. And where is that tweet? I'll pull it up now. This is a little bit hard to see, so let's make it bigger. So this is the dollar, kind of a storyboard of the dollar over the last couple decades. And I've been following the dollar since back, great financial crisis times. Now the dollar was, I was a gold bug back then before I found Bitcoin. And I thought the dollar was going to collapse and QE was going to kill the dollar and yada, yada, yada. I've changed my opinions around. I've evolved my opinions. And anyway, that's what you can, if you are fans of the show, you probably know what I'm talking about. But you can see back here, Euro was introduced much, much higher on the DXY after the Euro was introduced, up to 120 on the DXY. But then it came down into the great financial crisis. You had QEs. People were saying it's going to destroy the dollar. And what happened? Actually, after QE, it went higher. And it went higher in a stair-step fashion. So I was saying this is kind of a range down here post GFC. Then we get into a higher range for several years, 3-4 years here. Europe is struggling during this time, but the dollar is in this higher range. And then when QE or when COVID hit, I was like, okay, this is going to be a dollar wrecking ball. This is going to cause big problems in the global financial system. The dollar is going to strengthen even more up to a new range. And that was this gray highlighted box here. I've made several calls along the way. As you can see, I had made this bottom call back here in early 2022, it looks like. And then just very recently at the bottom, making the bottom call there, as well as calling pretty close, darn close to this top. I think I called 112 as the top, and it was got up to 114, but that was from a simple Fibonacci extension. But anyway, so this is the dollar wrecking ball that we're talking about right now. Let's go back to the chart. This is the last, zoomed in the last little while, broke up to new 2-year highs. We'll see where this goes. As the dollar rises, it will cause more and more stress in the global financial system and dollar shortages. It will cause yields to fall as the dollar rises. But that is what we're looking at for the dollar. US 10-year. Also put out a chart today for the US 10-year, looking at this Adam and Eve. And if I zoom out, let's go to the 4-hour. Just taking a look at some of this. I need to get this better here. Okay. So Adam and Eve formation. And this is the neckline. If it breaks, it's going to go down. We also have a bearish divergence on the daily and the 4-hour. That's pretty significant. This is the daily right here zoomed in. So I am expecting the US 10-year to roll over, where a lot of people are expecting it to continue higher. But overall, this pattern double top with a bearish divergence, I think it's going lower. Okay, so that was that. Let me just keep an eye on Bitcoin, 99,400. And oil for today. Oil was up on the day, but not significantly in the grand scheme of things. If you compare it back to previous, recent price history, it's off the lows, and overall it has a long way to go. If we go to the weekly chart, we can see that this isn't like any sort of bullish setup. It's actually a bearish setup, tapping on the bottom multiple times, probably going to break down lower, especially with Trump getting into office and drill baby drill. Okay, here is SP 500. That's the weekly chart. Let's go to the daily. Good day on the day. It was up on the day. Nothing significant to report. We are still fully entrenched into our pre-recession trade. Our pre-recession trade is that people are starting to tighten their belts. People are starting to get worried about the economy. And in that time, they might put more into their retirement funds, more into their passive investing, matching, that type of stuff. And so more and more money comes into the stock market. They'd rather, instead of some business or some individual, instead of doing something risky like starting a new business or maybe buying a new car or whatever they need to do, they're not going to do that. They're actually going to put some more into the market, into savings, into retirement. Okay. And that just goes in the stock market and it goes up and up and up. And also that explains why it's a very uneven market. The top 7 companies, top 5 companies are doing have most of the gains because they get that percentage of the passive flows. So if you're just investing in the S&P 500, whatever percentage those top companies are, they're going to get that versus the tail effect of the other 493 companies. So that's why we have a narrowing of the market, but the market continues to go higher. This is a pre-recession period. As soon as the market is sensing an imminent problem, a crisis of some sort, we will see yields drop. We'll see stocks drop. So yields will spike, or the price of bonds will spike, and stocks will sell off initially. Okay, so that is that. Let's go back to Bitcoin, 9,300. I don't think it's going to pass the 100K mark during this live stream, but we will continue to watch it. Let's get into some of the videos that I wanted to watch. Before I do that, let me check comments. Hope you guys are having a good Friday. It is later than normal. No comments I'm seeing. If you are watching on Twitter, jump over to YouTube and Rumble. I appreciate that. Like, comment, subscribe over there. Let me check Telegram, see if there's any comments. If you guys are watching on Telegram, let's see. Several of you are in here. Make a comment in the thread for this live stream. Dan P says another push coming. Looks like it. I hope so. I just wanted to get this live stream out because I was going to be waiting forever. And yeah, so, okay. Let's go into the Twitter tweets that I wanted to go over. And we will start with, let's start with this one. And this is, I'm not sure of his name here, but he's a CEO of New Market Capital. Uh-oh. Is Telegram still working? Sorry, guys. I might have to crash a Telegram for some reason. All right, I'm back. Guys, I think Telegram crashed. I signed out, signed back in somehow, but we are still good. Let me share the screen. System audio. Now this clip has the audio is fine on it. The next clip is the one that's really quiet, so you might want to turn up your volume here in a second. But let me zoom in and listen to this guy. This blew my mind. It probably
Bitcoin for 1 day, 1 week, it's extremely volatile. But for 4 years, 4-year hold period, the worst ever return has been just over 23%. The 5th percentile, 30%. The 50th percentile, 91%. So if you take a small amount of Bitcoin and you add it to a large amount of high quality credit in novel lending solutions, novel structured credit pairings, what you can accomplish from an asset allocation and an overall portfolio strategy perspective is incredible. It can actually be a cornerstone to close the asset liability gap in pensions.
All right, so that's pretty exciting. He's talking about combining the lending, combining credit with Bitcoin. And how does he exactly mean that? Well, he goes into that in this next clip. So let me share this. And again, this one is a little bit quieter. I boosted the volume as much as I could, but let's go.
So there's a property.
Yeah.
Physical property.
Multifamily.
Right. It's a
Multifamily. 63 units.
It's a multifamily property. The sponsor, effectively the owner of that property.
Yep.
Needs a loan.
That's right.
Okay. They come to you.
That's right.
Okay. You say, we'll provide you a loan in the form of a classic loan.
That's right.
Okay. So you're going to give them cash.
That's right. Term financing.
Term financing. And how long's the loan? Just
10 years.
10-year loan. Okay.
That's right.
At above market rate or below, or what's
No
the
market rate interest rate.
I'm just trying to slow the whole thing. Okay. Now let's introduce the Bitcoin piece into it.
That's right.
So no. Explain how the Bitcoin piece then relates. So the loan has been provided.
The use of proceeds is to pay off the existing financing.
Okay, before he goes into this, it's interesting. They're very concerned with understanding what's going on. I mean, this guy, this CEO that's sitting here, he's an impressive dude. He's very well spoken, very plainly spoken. He's got his crap together. He's a CEO of some major lender big enough to be on CNBC. And he's just speaking very plainly about this as if it's going to happen. It's happening. So these hosts are really trying to wrap their heads around this because they don't quite get it. And I think it shows that we're at the point where everybody wants to get it now. Okay, let's rewind a little bit. Let's go.
That's right.
So no. Explain how the Bitcoin piece then relates. So the loan has been provided.
The use of proceeds is to pay off the existing financing. So
the use of the proceeds
of the loan is to retire the existing mortgage.
Right. So there's an old mortgage.
Gone.
They're going to pay the old mortgage off.
It's been paid off.
Okay.
Now they have a little bit extra money to make some improvements in the property.
Right. So a little bit extra cash. So the amount of money you've lent pays off the old loan.
That's right.
It's also you have a little bit of extra to fix
Improve
stuff
the
up.
property, fix stuff up.
Yep.
And then with the remainder, which is a little bit
So you
more.
have even a little extra, an
That's
extra
right.
turn.
And that, instead of cash out, it's Bitcoin in. And we use it to purchase some Bitcoin and add it to the collateral package of the loan. So now our loan is supported by both the traditional asset, the 63-unit apartment building, and the Bitcoin.
Okay. So the loan, it was maybe $2 million more, so that's how you get the
Exactly.
Bitcoin out?
Exactly right. So it's
on the assumption that the Bitcoin's going to rise faster, and that will become an asset.
Over the life of the loan, for sure. So we think on the downside, this provides us with much better protection compared to a traditional lender, because a traditional lender, if something goes wrong, they have to recover against that particular building, which is idiosyncratic risk. Something might happen with the maintenance or what have you.
But that also requires conviction on your end that Bitcoin is not a volatile asset over time, and that is either going to go up or at least stay where it is.
Well, that's by fusing the Bitcoin with credit and by fusing it with traditionally financeable assets, it gives us the luxury of expressing that medium-term view on Bitcoin, and that's what's key. It's volatile in the short run. You know, I mean, minute by minute today, who knows? It could cross 100,000. That would be exciting.
How long's the loan?
10 years.
10 years.
And
Yeah, we're waiting for it to cross 100,000.
the minimum hold period for the Bitcoin is 4 years. So what we say to the borrower is we say, look, you can repay the loan at any time for any reason with no penalty, which is a really valuable feature compared to a traditional loan.
Yeah, that's like a home mortgage.
Like a home mortgage almost. That's very unusual for commercial financing. But what we do say is that to the extent that the loan is repaid at year 4 or earlier, the minimum will release the property. But the minimum length of time that the Bitcoin has to stay in escrow is 4 years.
Andrew,
I mean, wow. Wow, guys. That is, when I first heard that, it blew my mind. And I know that people like Tour de Meester and others have been, you know, trying to innovate in just thinking about how we can combine Bitcoin and lending. And this is a fantastic way to do it. I mean, yields will go down. You know, like if this lender says, okay, well, we have to charge you 7% on this loan, but actually if you collateralize it with that extra Bitcoin, add that to the building as a package deal, you know, you can get 5%, right? And that would be huge. So, oh man, it's just so big. This addressable market is so big. I'm not sure exactly what the commercial real estate market is, but the total real estate market in the globe is well over 350,000 or 350 trillion. I think Saylor has said something about 400 or 450 trillion. And so if Bitcoin can just get a little bit righter on that, you know, 1, 2, 3, even 5%, collateralize Bitcoin to the value of the property, trillions and trillions and trillions of dollars of demand. And it would be very low volatility because they would have to hold it for the 4 years. Other lenders might say 10, whatever the case is. But very, very exciting stuff. Let's see. What other video do I have here to show you? Again, now this one is going to be less loud, so you probably want to turn it back down if you haven't. And this is CNBC as well, but this is Michael Saylor. So I'm going to go into the volume for the stream, turn it down just a little bit. Before I do that, let me check the price and see how that's doing. We're sitting right at 99,000. I don't know if it's going to break it during this live stream, but I will keep an eye on it. Okay, back to this tab, and let's go with this.
Welcome back to Squawk. We're watching Bitcoin near $100,000. It hit a high of about $99,500 yesterday, but MicroStrategy, the largest corporate holder of Bitcoin, was down 16%. That fall coming after Citron Research disclosed a short position in MicroStrategy. Citron said that it's still bullish on Bitcoin and praised MicroStrategy's executive chairman, Michael Saylor. But it said the company's volume has completely detached from Bitcoin's fundamentals. Michael Saylor is here with us this morning, and I'd love for you, if you could, it's great to see you. Bitcoin's been a wild run, and boy, have you been right. But I'd love for you to respond to this report.
Yeah, well, I think a lot of people don't understand our core business. We're a Bitcoin treasury company. We're powered by a Bitcoin reactor. We've got $35 billion.
Oh, man. His rhetoric is hilarious. I mean, he's obviously famous for it. But, yeah, it's just, I don't know. If I were, is that how multi-billion-dollar CEOs talk, like behind the scenes? You know, when they're in their cigar lounges sipping on some whiskey and having a cigar, or whatever the stereotypical thing might be. Is that how they like talk? They come up with funny names to say this is a Bitcoin reactor. I don't know. It's pretty fun though.
Dollars of Bitcoin, and it's spending at 100 vol. So the way we make money is we're selling the volatility and recycling it back into Bitcoin. And we're also stripping the volatility and the risk and the performance off of fixed income securities. And we're transferring that to the common stock. So our common stock is delivering 2x Bitcoin, 2x vol. So Andrew, if you want to understand the economics of this, we generate a spread. The BTC spread we generate, it's a function of the equity premium, the convert premium, and the Bitcoin premium. The Bitcoin premium is the ARR Bitcoin versus the US dollar. 2 weeks ago, we did 4.6 billion of an ATM. We ran it at a 70% spread. That means we made about a $3 billion.
Now he's going a little fast. I'm not like a super guru on all of this language and all the acronyms when they're this fast. And this is just normal speed. Usually I listen to things at 1.5 speed, but this is coming very, very quickly. I know he's on CNBC. He's got the soundbite and he needs to get it out in 2 minutes or less, or whatever the case is. But it's just very rapid fire, and it doesn't come across. I mean, it kind of comes across badly. Like he's trying to sell something. He's trying to hide something with a Gish Gallop type of strategy. But I'm not saying he's lying. I'm saying that it doesn't come across the best, maybe.
$1 billion BTC gain in 5 days. That would be about $12.50 a share. But over 10 years, that's $36 billion, or about $150 a share, just on that 1 week. This week, we did a convertible bond, $3 billion at an 80% BTC spread. That's a $2.4 billion gain. That's about $10 a share. But over 10 years, that's $125 a share to the shareholders. I think that the thesis of the shorts is, if the premium in the equity disappears, we can't make money. What they miss is that when we actually borrow money at 6%.
Okay, this is the important part, because this is the big criticism is right now when they do the at the money offerings or at the market offerings, they are able to take that premium back in to buy Bitcoin and increase the amount of Bitcoin per share. So they're diluting. Sorry, the door rattles when someone slams the outside door. So they take that premium, and when they buy Bitcoin, after they've diluted the number of shares, they're actually increasing the amount of Bitcoin per share per person. So there is a reverse dilution effect by these at the market offerings. Now, when that runs out, when the premium runs out, people are saying, what is the end of this story? Is it like a Hunt Brothers, is it a Ponzi scheme? Is it going to collapse? What happens when the premium goes to zero? Because it eventually will have to go to zero. It can't be, if there's a premium, he's going to continue to buy Bitcoin. And so this is what he's explaining right here, like why the premium closing doesn't matter. And let me rewind just a little bit.
A share, but over 10 years, that's $125 a share to the shareholders. I think the thesis of the shorts is if the premium in the equity disappears, we can't make money. What they miss is that when we actually borrow money at 6% and we invest it in Bitcoin, and Bitcoin goes up 30%, and by the way, Bitcoin's going up 60%, we're getting a 90% BTC spread, but
Right.
it would be 80% BTC spread, which means the $3 billion fixed income raise in preferreds or bonds generates the same $125 a share and $30 billion over 10 years. So
Right.
once
Michael,
you
I think
understand that.
Over 10 years. But one thing is there will be down years. Some people are talking about this being the new GBTC premium. So the Grayscale Bitcoin Trust, that was a one-way door, just kind of like MicroStrategy is, until they became an ETF. Then they were able to get Bitcoin out. But you would buy shares from Grayscale at NAV. And then the secondary market, there was a premium, 30%. So you could buy at NAV and you could short the secondary market. Now there was a window, a 6-month window that you had to hold it because it was a closed-end trust at the time. It wasn't an ETF. It wasn't like this, there were rules here, and to make it compliant, it had to be a closed-end trust at the time. And so you had to have a lockup period of 6 months. So you would buy Bitcoin at the price that it is, at the market price, and then you would sell on the secondary market, you would sell short. And so that way you were able to harvest that 30% yield, and you could just continually do the same thing. You could buy GBTC, that would force them to go out there and buy Bitcoin to back their shares, and then you would short it on the secondary market. And you would just continually harvest the 30% premium. Okay, it's a little bit different than this, but it's similar. That premium is what drove a lot of the last bull market for Bitcoin. And people are saying that this premium, harvesting whatever they're doing here with the at the market offerings, is similar. Okay, it is. But the problem with the GBTC is they had unlock periods. Once that unlock period came, they would dump it on the market, and it was what they were able to unwind. Another thing is people were leveraged long on top of that. So they were offering, like if you BlockFi or some other company, you would lend them your Bitcoin and they would guarantee you like a 7% interest rate. I don't know exactly what it was, but you would lend them your Bitcoin, and they would take that Bitcoin and they would lever it up and go into GBTC. So they would be making 30%, paying you 7%. And that could unwind because that's built on leverage. When Saylor's doing the at the market, it's not leveraged. So it doesn't have this explosive unwind, this explosive collapse like a Ponzi scheme would that's highly leveraged. So that's what he's trying to explain. However, when he's talking about this Bitcoin premium, 90% Bitcoin premium, or whatever the spread is that he's talking about, that will be negative if the price is crashing. So if we go into another bear market and we get a year where we're down 50%, that is going to affect the company. But it's so lightly leveraged right now. I think they have 32 billion in Bitcoin, and I think they have like a total of maybe 5 billion, maybe 6 billion now in loans. And so even if they had to repay everything right now and the price of Bitcoin was cut in half, they could still meet all of their loans. So they're not insolvent. It's very low leverage. Other than that, at the market offerings, those have no leverage. So that's what he's explaining here. He's a little bit not paying attention to the bear markets.
That you have a different view of the company.
So what do you say, though, to those who say there's a risk here? Because this is effectively a levered Bitcoin position. And if, in fact, Bitcoin goes down, this becomes a much more complicated situation.
Yeah, well, the number one risk you take is the existential risk that Bitcoin has an extinction level event and goes to zero immediately tomorrow. But every long investor in MicroStrategy is a Bitcoin maximalist or a Bitcoin believer. They've accepted that risk. Once you accept that risk, what do we expect? We expect it's going to go up 29% a year for the next 21 years. It's been going up 60% a year. So the people that are buying the equity are buying the equity because they want 2x Bitcoin, they want 2x vol. And once you accept that idea, you can see, over the last 2 weeks, Andrew, we've generated $5.4 billion in BTC gains. We're making 500 million a day. I'm staring at my
Damn, 500 million a day.
screen, and we're selling dollar bills for $3, sometimes a million times a minute. And so it's not impossible. I mean, we may very well be the most profitable company in the United States, growing the fastest right now, because there's not many companies that are making $500 million a day doing.
Okay, that is going to rub people the wrong way, because it's they're growing through financial engineering. It's not like they're a factory and they're growing by adding more people, adding more products, adding more things. It kind of is going to rub people the wrong way because of the way you look at it. I wouldn't say that growing through financial engineering, however legitimate it is, which I think what they're doing is legitimate, however legitimate it is, that it's going to rub people the wrong way when you say, we sold a dollar bill for $3. We're the fastest growing company in the world. It doesn't come across right.
What they're doing.
Michael,
and so if you don't like Bitcoin, you don't want any piece of it. But if you like Bitcoin, then this is a monster for you.
Oh, look, I don't think anybody is debating the success that you're having, no question. I think the question, and we had Michael Novogratz on the broadcast yesterday, is just the question of leverage. And, when people talk about leverage and, all sorts of bells go off in people's minds about what can happen if there is a downturn or there is a retreat, not necessarily to zero, but we've seen this be a very volatile asset. And while it's 100% gone up over the long term, and I'm not questioning that, I'm questioning whether you think if in fact there was a retracement from 98,000 to, I don't know, 70,000, what happens?
I'll make 2 points. 1 point, participants in the market are buying Bitcoin 20x faster than the supply is coming from the miners. There's a major demand supply imbalance, and that's going to continue for the foreseeable future. So I don't really expect that, but let's say it did happen. MicroStrategy's business is so good, we're generating 1 times the capital we raised. When we raised $10 billion in capital, if Bitcoin traded down $20,000 like you described, we'd still make $10 billion off the arbitrage by selling the volatility. If it trades up, like I expect it will, we make 10x that. So we're either making $3 billion on that convertible bond this week in the worst case when it trades down, or we're making $30 billion on that convertible bond if it trades like the Bitcoiners believe it will.
And Michael, how should investors think about buying MicroStrategies versus buying now an ETF that might be levered, for example?
Well, what makes us special is we've got $35 billion of permanent capital. So we can lever that. We can sell a 5-year bond, or we can pledge that as collateral and raise fixed income instruments. If I sell 6% bonds or 6% preferreds, I'm getting that 80% or more spread out of it. BlackRock is a great company, and IBIT's great, but it's overnight deposits. And the ETFs have overnight deposits. So they can't create duration. They can't exploit the difference between borrowing money at 0% and investing at 60%. But that's exactly what we've been doing for the past 4 years.
So right now, I know you've been buying your own.
That was a great explanation. There's just more weapons. So IBIT is it's supposed to be very, very much just a very strict derivative of Bitcoin. But MicroStrategy is a private company that, has all these different weapons at its disposal.
Stock, but right now, if somebody was interested in Bitcoin, you think that the better bet is MicroStrategy versus buying it directly, for example, forgetting about the leverage piece of it?
You know, I actually think by far the best bet is buy our convertible bonds, because our convertible bonds are outperforming Bitcoin right now with downside protection. That's why we sold 3 billion of them this week. That's why I got a $500 million order to buy one in a 20-minute meeting. So if I was really Bitcoin curious and I wanted downside protection and I wanted the upside of Bitcoin, I'd buy the convert. But ultimately, you got three choices, Andrew. You can buy Bitcoin fixed income instruments like a MicroStrategy convert, which is some of the upside but downside protection. You can buy the straight Bitcoin in a wrapped ETF like IBIT, which is fine. Or you can buy high voltage Bitcoin, 2x Bitcoin, which is what MicroStrategy is. And
High voltage. There's his terminology again.
I think it depends on the investor.
Michael, what's the conversion premium and what's the coupon?
We just sold that bond at 55% premium, 0 coupon, 5 years. It's the biggest crypto convert in history.
It's a 0.
And by the way,
that's interesting.
0. And we're the only company in the world that's ever issued 5 converts in a single year. So we are dominating the convert market as well as the equity and the options market in Bitcoin-related securities.
I know you're obviously super bullish on Bitcoin. We had a guest here in the 6 o'clock hour. I don't know if you had an opportunity to see him. He said he believed that it is plausible that Bitcoin gets to $1 million a coin literally in the next year, given what he thinks may happen in Washington as it relates to this new Trump administration.
Well, my long-term forecast is 21 years, 29% ARR. Right now, we're 60% ARR. It'll decelerate toward 20% ARR over the next 21 years, and the volatility will decelerate from 60 vol to 20 or 25 vol. So that's my outlook. I think that the red wave was incredibly bullish. Basically, the red wave converted headwinds into tailwinds. Instead of a 20% headwind, it becomes a 20% tailwind. So I would be more bullish based upon the red wave. But ultimately, I think the right way to think of it is it's always going to be the stronger capital asset versus a conventional S&P index.
So what's that get us to? With what you say, 29% ARR, or what's in 21 years? What is that?
My forecast is 13 million a coin by the year 2045, and what I tell everybody is every Bitcoin you don't buy today is going to cost you $13 million in the future.
Oh man, how bullish is that, guys? So that was a great interview because it's going crazy right now. And he does need to have this was a 10-minute interview. He needs to have that time to speak and to answer some of the critics. And I think that's what he did. But a couple, just to recap, I think he did a little bit of too much data, too much gish gallop on the data. I'm not saying it was wrong. I'm sure it was all 100% accurate, but it just comes across as a little bit of a gish gallop where somebody's trying to pull something over on you. But overall, I think it was a very good performance, very, very good performance. And he's been open to talking to people. I mean, he was volunteering to talk to Microsoft, right? At the board meeting for Microsoft. So, for these big corporations, big money, big pools of capital, he's available to speak to them. And then, one-on-one, he's not going to be trying to fit stuff into a soundbite for CNBC. He's going to be talking to somebody and trying to explain it to them, they're very personally. Let's take a look at the comments here. Raphael's back. What's going on? Breedlove and Schiff had a gold versus Bitcoin debate. Was this recent? Schiff said that, of course, Bitcoin is more portable than gold because there's nothing to port. I mean, is he wrong? Is he wrong? I mean, it's like, no, there is no physical transportation of stuff. And also, your private keys or your addresses, your UTXOs, let me put it that way, your UTXOs, they exist everywhere. They don't cross borders. So it's a very interesting to think about, like, almost philosophically, is that with Bitcoin, there is no cross-border payments. As long as there's a node inside of those borders. If there's no node inside of Panama, and you were trying to send Bitcoin to somebody in Panama, and they had to rely on a node that's outside of Panama, yeah, then you could say technically that there's crossing of borders. But as long as there is a node in Panama, and a node in that country within those borders, there's nothing moving. There's nothing moving. You're just reassigning UTXOs. Those UTXOs already exist inside of that country on a node somewhere. And so there is no cross-border payments. It's not really transporting. It's a different dimension, if you will. It's like abstraction above our dimension is the UTXO dimension and the blockchain dimension. And it's just it's kind of like is a wormhole, is that actually transporting, or is that just connecting two distant points in space instantaneously? So that's what you got to think about when you're talking about portability of Bitcoin. It's more than portable. It's I don't know, ever present is some sort of word. But yeah, that was a fun little tangent there. Nakamoto, who was that lender? That was the CEO of New Market Capital. They are, I think, out of Philadelphia, if that's who you're talking about, with the pairing Bitcoin with the buildings in a real estate loan. Dex Invictus back with us. What's going on? Sailor selling the fuck out of this stock. Yep, he is. And again, like I said, it felt a little like too much selling, too much gish galloping there. But anyways, it was good. It was good. BTCP, happy Friday, man. Yes, 100K. Let's take a look at price. So if you guys don't know, I was live streaming earlier today, and I was on Telegram for, I don't know, 45 minutes. I don't know exactly how long. And just waiting. We were waiting up here. It looked like it was going to break. Didn't break. I was going to go live like when the break was imminent, and then we were going to do all this that we just did, listening to these, watch it break 100K. Then we're going to talk about all the commercial real estate and stuff. And it was going to be a nice little live stream. But then I had to push it back, and I was waiting to go to live before, as it was breaking 100K. That isn't happening right now. So I just decided to go live and watch that stuff. And then later tonight, I'll have this alarm set when it crosses 99,800, and I might go live again. That might be a Telegram exclusive. I would just jump onto Telegram and hang out with you guys as it's crossing that border. Raphael says, yes, that was recent with Schiff and Breedlove. Did you see MSTR drop 30%? Not today. It dropped 30% yesterday, right? Yeah, it was up slightly on the day. It did drop 30. Nope. MSTR. It dropped yesterday. It dropped 16%. It was the largest single day drop, though, in their history. So it was a pretty big pullback. But it was up. It was green on the day, if that's what you're talking about there. Let me check Telegram, see if there's any comments over there. No comments in. Oh, there are some here. Simon, 99K retest. Yo Lemon says, coupling Bitcoin with lending lowers the risk associated and improves their risk-adjusted returns. Correct. Yep. Whoever offers this product first will steal a good chunk of lending, and it's apparently being offered right now. It's a huge deal. Like in the earlier live stream, we were talking about what happens when they do this with mortgages too. You buy a house, the average house, say, is $420,000. And in the loan details is you have $20,000, or let's say 5%. So that would be $21,000 worth of Bitcoin. And you have to hold it for the life of the loan, whether that's a 10-year mortgage, 15-year mortgage, 30-year mortgage. That would be huge, absolutely huge for Bitcoin and for your own net worth, like forcing you to invest in the future. He had to describe the terms in slow motion on CNBC to allow the concept to even sink in. Yes, I agree. I mean, I had to try to keep control of my emotions. I had to keep control of my emotions when I was listening to him. So yeah, I'm glad that that guy, that CEO of New Market Capital, he is impressive dude. Another risk difference from GBTC and MSTR actually generates profits from their software business, which they use to service the debt. Very, very, very good point. Yeah, they're similar, but there are major, major differences. And people are saying, oh, MSTR is going to be this MSTR premium is going to be the new GBTC premium that kind of crashed the market. But there's too many differences, I think, for that to hold up in the future. And how is the premium going to go away? But that's a hard one too. All right, Green, thanks for hanging out, buddy. All right, let's go back to comments over here. So Raphael, you know what? I could watch that as a live stream, the Schiff and Breedlove thing. I think Breedlove would probably have done a pretty decent job of the Bitcoin side. Saifedean would be another one, of course, that would be like that. I'm just not a big fan of Breedlove because of his scammy past and his kind of the way he treated some of his followers and stuff. I don't like that, but I'll watch it for sure. And Eastside Tony says the dog can't make it happen anymore, or the dog can't take it anymore. What is that in reference to? My dog barking in the background? I don't know. All right, guys. Well, this is going to be it for today. 276 people watching. Thanks for hanging out. You can see we didn't quite make it to 100K. I have my alarm set. I'll probably go live at least on Telegram. And if I can get it real quick and go out on the other platforms, I will. But the 276 people watching, make sure you're over there on YouTube and Rumble. Like, comment, subscribe over there. That helps the channel grow. I appreciate that. Also, check out bitcoinandmarkets.com. That's my homepage. You can join the email list for free, get all my free content. There is some paid content on the site, so you take a look at the paid tiers if you would like to. And that's going to be it for this one. See you on the next one. Bye.